And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today is Thursday, July the 28th. I'm John Hoagland. Thanks for trusting me with your time. Today is the third day this week that you've all been waiting for. We got the GDP information out this morning as well as jobless claims. Let's jump right into it this morning. 7:30, the GDP numbers came out. The last quarter was minus 1.6% contraction in the U.S. economy. Most consensuses were saying we were going to have a positive 0.5%. Unfortunately, it came out negative 0.9% contraction. That is typically the sign or the main sign of a recession. Now, I heard private estimates as much as down 1.2 to 1.3%. So in some ways, this may actually be a little bit less bad than many people were expecting. We've got our equities really just kind of trading inside of the overnight range, knee-jerking in both directions. The markets that seem to be most early affected by this is gold and the euro, as far as I'm seeing here. We had jobless claims come out. The initial jobless claims last week was 261,000. They were looking for 253,000. It came out 256,000. So a little more than they were expecting from this week, but a drop from last week. The continuing jobless claims was also lower than expected and lower than last week's number. We're still waiting for the nat gas numbers to come out today. It's National Chicken Wing Day, so get yourself some chicken wings. U.S. stocks were set to open lower. That seems to have changed a little bit. We've got the Nasdaq, the only one still lower on the day so far. The Nasdaq up. The S&P is up 3 points, the Dow up 5 points. A lot of digestion going on prior to the open this morning. We've got some disappointing results yesterday from Meta, Facebook. This morning's bigger earnings, we had Nestle, which was mixed, Merck, Comcast, Shell, Honeywell, and Anheuser-Busch, all beating expectations as far as earnings per share and revenues overall. Oil companies showing some good results. We have ExxonMobil and Chevron announcing earnings tomorrow. But this afternoon, after the close, we've got some biggies. We've got Apple, we've got Amazon, and we've got Intel. So pretty heavy in the tech sector after the close today. Crude prices have continued higher after yesterday's surprise 4.5 million barrel draw in crude stocks. And we've got a little bit of a breakout above this channel that we've been watching on the daily chart. So we're going to see that in the charts this morning. As always, please hit the lucky like button, share, comment, question, feedback, heckling, and love are all welcome. If you like the market forecast, tell everybody. If you don't like it, tell me. I need to know. You can always subscribe to our YouTube channel so you get notified when we do go live. See if I've got some more updated information here as far as the VIX. Actually a little bit lower, 2309 as we speak. The yield on the 10-year coming off pretty good after the number here, 2.73%. So coming off the recent highs a little bit. And the dollar index up a little bit here at 106.59. And so we are well into the teeth of the morning here. We've got some information. We've got some opportunities. It's going to be hard for me, I think, to remain patient and thoughtful in trade today. I'm very excited about the trading day. I got to remind myself that I just have to wait. I have to be patient. I have to wait for the market to tell me what it's going to do and then try and find good locations, good opportunities. Always be thinking in hypotheses and taking strategies that fit that hypothesis as long as that hypothesis rings true. All right. Good morning, everybody. We've got Shaw, first one in the room. Welcome to Recession Trading. Yes, Jeff Mullins, good to see you. Zareen, Brian, Kushu, good afternoon, or good morning, America. Good afternoon, Europe, and good night, Asia. Dimitar, good morning. Brody from the Olympic Peninsula. Hopefully you're able to stay cool out there, Brody. Tachyon, good morning. Scott Shaw, and he conquered. Dark Heaven, good morning. Federico George. Ron, Anthony Seidel, Bill Phillips, good morning. Jan, JD, good to see you, sir. Serenity Trading, I know you. You were Bob from Mexico. Hola. DA, Charles March. Sarah, good morning. Prayers and love to you as well. Vince, good morning. Patrick, Denise. Scott, Masking Duct. Jules, good morning. Dead Letter Opener. Hegel Matters. Jerry is awake. Rick, my brother, love you. James Harris. Unicus, quote today, in investing, what is comfortable is rarely profitable. So true. Man, so many trades that I take, the ones that make me nervous are the ones that actually pay the best. So true. Dan Trader, Tachyon, the Rooster, good morning. Wasn't able to get on any trades yesterday that I liked. Got another shot today to finish step one. Just take your time. Take your time. It will come. If you push it, you're going to step away from your strategy. It's your strategy that's got you this far. Stick with it. Jay, good morning. Rob T, Marcelo, Andrej, Frederico, first recession of my trading career. Steve Frischman, good morning. There's a new name. Welcome to the Market Forecast. Stephen C, Trading Research. Anissa, good morning. Frederico, hopefully it will be there. Will be more? Yes, of course. Need to see you now have a daily payouts on. Yes. Nice to see it, right? We're speeding up the payout process here at Top Step. You're going to get your money a lot faster. There's things that we can't control, like banks, but we're going to be processing them much faster. Dr. VJ, good morning, everyone. All right, let's jump into the charts here. We do have Make Hogue Money after the forecast this morning, so should be an interesting one. We're going to watch the open and the equities, and there may be some big opportunities. Remember, we don't have to take any trades, but we'll be discussing and voting for and taking any trades that are voted for, and we will see you on Make Hogue Money. Just getting notification that Mom is watching. Everybody say hello to Mom. Let's get into the charts here, because we've got a lot to do this morning. Again, I'm trying to remain calm, trying to remain patient in my trading today, as always. So let me get this set up. All right, we are good to go. Let's take a look. All right. So we were noticing the bull flag that we had yesterday morning. We broke out of that bull flag, and we did bring in some volume. We we gained open interest approximately 1,500 in the S&Ps. Not a big amount. I wasn't all that impressed by that number. We have the GDP today. Anything can happen. ACH, that's our acronym here. And we are, just trying to trade what we see. Take what you're seeing in the charts. What is the market telling you with the tools that you're using, and use that to your advantage. Always remember, be thinking about managing risk. Risk management is first. Capital preservation today. Anything can happen. We had our second straight GDP that was showing now that we are falling into recession. The markets are responding to that early here. But who are the participants early here? Have the longer time frame participants come into the marketplace? We don't know that yet. I'm going to be very interested to see how this market opens up. Speaking of that, we knee-jerked to the low. We knee-jerked to the high of the overnight session. We've taken out the high of the overnight session. We do not necessarily have a late spike here. It doesn't mean that it can't show acceptance at higher pricing. We had a possible open that may have kind of pushed this market into an area of repair because we have this single line of TPOs here, very low volume, very little time there. Sometimes price will come back in and refill that area. Looks like we may be opening above the possibility of the need for repair. Do we have any overnight inventory? Not really. Not really. We never really moved far from where we opened last night. We still haven't. We keep pushing higher, A lot of folks, I'm sure, got stuck down short in the hole down here. When the number came out, everybody said sell, 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 and we didn't see any continuation. Now they're all getting squeezed out. So it's a good thing we're all patient. Good thing we're all patient. We don't know what's going to happen. The market is offering us an opportunity to be patient this morning because we don't have a gap. We don't have a late spike. We are opening outside of value from yesterday, which may indicate an opportunity for us to trade a little bit earlier. But I'm pleased that I'm going to get the opportunity to maybe participate. If this market was going wild right now, I would not be thinking about participating. But it's offering us a little bit of solace, a little bit of patience. Nobody knows what's going to happen. I certainly don't. Here's that bull flag that we broke out yesterday. And boy, do we found some continuation to the upside. So again, we're going to stay patient. If you are of the mind, join us for Make Hogue Money. We've got some really good traders that contribute a lot to that. So it's going to be an interesting one today. Let's take a look at crude oil here. So we've had this channel. We've been bouncing up against it. We have bounced above it now. Supply side wins. Okay, lack of supply, I should say, wins as price breaks out of a 5 to 6 weeks channel that this market has been in. We saw volume increase yesterday. We lost open interest. So as we were getting closer to this area, we were probably, scaring some shorts out of the market yesterday. Now we're above that level, and a lot of those shorts, which were taking buying power out of the marketplace, are now able and present to affect the market. Take a look at the 30-minute chart here. So here's our breakout last night. I like the way this happens because this is what I look for in breakouts in regular trading hour session too. So the market finds resistance overall in the overnight session up against this trend line. Once it breaks out above it, it comes right back to the trend line before continuing to move to the upside. We've got the market opening in just a couple of minutes. We're already seeing some of our overnight longs perhaps getting a little bit nervous. By overnight longs, I'm saying that the market opened here. We looked lower, but overall we've been bringing price higher, and to do that in short time frame, it takes a lot of short time frame buyers to be aggressive into the long side. Are they short? Probably not. They're probably getting long, looking for opportunities today. We're already starting to get a little bit nervous. We got a couple of minutes here before the open. We may go back and see if the opening range provides anything for us in crude oil this morning. This is the Nasdaq. The Nasdaq did not present as well as the S&Ps to the upside yesterday. However, the Nasdaq lost approximately 8,800 in open interest. On a breakout of this magnitude, that's not good news. It's not good news. So the Nasdaq probably weighed down by some of the tech earnings that have not been altogether all that good, in my opinion. So this breakout, not all that successful. Again, we did increase volume on it. That's good. But we didn't add open interest, so there's no new buying, no new bets to the long side coming up here, which makes me a little bit nervous as far as how good the auction process is doing. We're still showing upside structure in medium time frame. We've got higher lows, we've got higher highs. There's no reason to think that this thing's going to fall apart unless, of course, the GDP is digested very poorly. Overnight inventory. Let's take a look at the 30-minute chart. Okay, we've got 8 o'clock. We're in the opening range in crude. The Nasdaq is opening in an area that might bode for repair. Very little time and volume was spent in this period, in this area. So when we open in that area, there's a tendency for the market to go down and trade the high volume node in the lower distribution of time and volume, and the market then may go check the high volume node in the upper area of distribution in volume and time. Kind of bordering on that. Again, we don't necessarily have late spikes. This is the L period. The M period came back and took out all of L period. So we don't really have a late spike with which to deal with. Doesn't mean that the value high from yesterday or the base of an assumed late spike might not be a decent opportunity for us, as we have just looked up there and kind of come back into value. Very, very difficult, these markets. Here's the 1 minute. Okay, we just finished the opening range in crude. We've got 98.67 the high, 98.37 the low. So we've got a 30-point opening range. We have not yet driven. Yes, we have driven below it. If we were to be looking for shorts, this might be an interesting area because we can limit our risk to approximately 35 ticks. Take a look at the 30. Remember, we've got a lot of overnight inventory to the long side. If they don't find what they're looking for, and that's longer time frame buyers on the open, right now we're looking at longer time frame possible sellers in control now that the opening range has been established as the high of the regular trading hour session. That could easily bring price back to where the market opened last night or even points lower. If we do take out the high of the opening range, which is right here, 89.67, then all bets are off. Things may have changed. Gold. Finally, we're getting some reaction here in gold. We've got a short time frame rally, bull flag, continuation. Yesterday, we lost 5,500 estimated open interest. Not necessarily good news. And you'll notice today we are trading the December contract. Volume is higher in December. So when it opened, it left the opening range at the high of the session. No response for me on that because I'm waiting for the GDP number. And then once the GDP number came out, we took out the high from last week as well as our weekly kickoff high in December is 1757. Open interest is still going to be blurry because we're still in the teeth of rollovers, so we can't really count on that loss of 5,500 as telling us that we didn't bring in business in the December contract. So looking at the December contract, we added 23,196. That's estimated again. We lost 34,000 in August. Well, August is going to be the expiring month, so it makes sense that we're going to lose that. But overall, we did lose open interest, and that's not necessarily encouraging for continued upside. The advent of price above weekly kickoff high. What are weekly kickoff high and low numbers? They're numbers that I'm expecting longer time frame traders, big traders, to look at areas where they're going to need to adjust inventory. If we see longer term buyers come into this market, look at the amount of space we've got to the upside here. We've got a lot of space. That could provide a pretty decent opportunity. Here's the euro. It's hard to do all this research and then have something change things at 7:30. We're still really largely range bound. Losing 5,900 on this move to the upside yesterday, but again, largely range bound. We've got a little bit of a downward channel in this. Again, that open interest is weak on an up day yesterday. Volume was a little bit better, so that's a bit encouraging. We did have a late spike. The base of that late spike is 101.94. 01.94. We opened basically spanning it. Are we going to accept the late spike and move higher? Are we going to reject the late spike and move lower? Not a lot of time and volume up here, showing initial indications of rejection. So I would look for the market to return back to low of value, back to our overnight low. Overnight inventory is to the short side. We may have reconciled that, but we opened down here, the high volume node here, high volume node here. Is it possible for repair? Yes, it is. Is it likely? The way the market looks to be appearing to reject the late spike to the upside last night, giving a little bit more probability to a move to the downside. But anything, as usual, can happen. A late spike is when price enters an area that is new in the day time frame. We haven't had a lot of time to show acceptance of that higher price when the regular trading hour session ends. So we look to see if the market opens in or above a late spike similar to this here, because that's going to show us initial acceptance of higher pricing. Nothing happens the same way twice ever, but it seems as though we've opened kind of at the base of the late spike and are showing signs of rejection of the late spike. That would be rejection of higher pricing and perhaps an expectation of price to move back down lower. So we'll be looking at the recap today as to what happened in all of these markets, but I'll be kind of sharp to see what happened in the euro today. We got the 10-year rates lower, prices higher. Added 19,500 contracts yesterday. That's pretty good. It's kind of unclear as to what side those bets were placed on, but it ended up on an up day, so we're going to make an assumption that's new longs. Okay, we've got this kind of upward channel here, weekly kickoff high. See how sometimes this just happens? We have a channel in short time frame that converges with a weekly kickoff level. These can be powerful levels. We're going to be looking to see if we can see continuation to the upside here. As long as we're holding above that, moves back towards us, give us opportunities to limit risk. Let's look at the nat gas now. I don't want that. So we've had a pretty big run to the upside. This is a very healthy auction that has now fallen into balance. Well, markets aren't going to just go in one direction forever. Yesterday, we added 5,000 in open interest that may actually be new shorts, but we're above an important inflection level that continues to provide support for us, and that's the weekly kickoff high, 836. Our last night, 837, was our low. Take a look at the 30-minute. Yeah, this weekly kickoff, between weekly kickoff and last week's high is certainly going to be pivotal. Finding rejection down there, good opportunity because it allows us to limit risk. Anytime we see these important levels, remember it gives us that opportunity to limit risk, and you're seeing this market continue to the upside as we speak. So this pullback here, necessary and actually healthier for the upside move. Got to adjust inventory, come to support, stay at support, and then we may have a tendency maybe to go to the upside. We're going to have to see, of course. What else do I got for you? I think that's it. It's very, you can have a million hypotheses coming into a day like today, and none of them are going to work, or all of them are going to seem to work. It's one of those days where there's a lot coming at us, a lot to digest. Take your time. I suggest everybody when you're going to take a trade today, ask yourself out loud, verbally, is this in my best interest? Sometimes the impulse trades that we take, we don't put through a conscious thought. If you ask yourself before you do anything, is this in my best interest? You may catch yourself trading outside your strategy and have that opportunity to think for a second and not take that trade. Even a trade that's out of strategy can be a winner, but that just kind of ingrains bad behavior for the next time we're in that situation. And 9 times, 99 times out of 100, impulse trades, to me, are usually not going to end up very good. So don't count on luck. Ask yourself, is this in my best interest? Everything you do, say it verbally. If the dog's looking at you like you're crazy, if your wife, your husband is looking at you like you're crazy, say, Hogue told me to do this, and let me know if that helps your performance. Ask that out loud, Ryan. Right. So it's one way to stop yourself from taking impulse trades. Is this in my best interest? All right. Let's get ready for Make Hogue Money. It's great to see everybody saying hi to Mom. Hi, Mom. Love you. And we will take our deep breath. I hope you guys do that. Remember, remain humble, grateful, and creative, and patient in your trading today. I'll see you in the proverbial trading pit here in just a couple of minutes. We'll get Make Hogue Money set up and ready to go by 8:20. Looking forward to seeing all of you there. If I don't see you all there, I hope you have a wonderful trading day. Make sure you trade well, limit risk, and profit today. But always be here tomorrow. Always be trading for tomorrow. Yeah. See you at Make Hogue Money. If I don't see you there, maybe I'll see you on the recap today. Have a great trading day.